Bull versus bear segment, and today's a Nifty 50 counter, which has a 37% upside, Puneet. And when I read that, and when we both made eye contact in the morning after we both read it, that just was unreal. A TCS, a Nifty 50 counter having a 37% upside, top weightage on the IT index as well. Take it away.
Well, thank you for that. Definitely a huge upside from here for TCS. That's according to CLSA. They've come out with a brokerage note looking at a target price of over 4,200 rupees per share. They mentioned that valuations now seem very accretive to them, and international growth largely is expected to be strong in this particular year. That's the thesis of the report, and hence the positive upside that they are seeing on the stock as well. But on a contrary view, post quarter one results, Jefferies had actually said that revenue growth will be unlikely for TCS in FY26 as a whole, and this would be the third straight year where we would have depressed earnings, to say the least, for the IT major, and hence a contrary view. And this one has a street divided. While a lot of brokerages do have buy calls, almost 65% of those who cover the stock, the upside is still quite limited in terms of earnings growth for the company. The second bull case, and here's where it gets interesting, because on 9 September, a couple of days ago, we did mention that Infosys has announced a buyback. There are chances that it may invigorate the whole sector, especially in the large cap IT, for talks at TCS too for a buyback. We have the meeting today of Infosys, and we could see all these counters being active again starting tomorrow. So that'll be the one to watch out for. Apart from that, in terms of the bear case, we've seen largely lower investment opportunities for the companies. They have been slightly behind the curve for the Gen AI, and I'm being very generous to them where I mentioned slightly, because we haven't seen all those deals largely come in the financials for TCS. So there is still a lot more to do, and it will happen in a course of time. But how quickly could that come into the numbers? That'll be something to watch out for. Third bull and bear case, and now again, we're going back to the point of US Fed rate cuts. We've been mentioning that the meeting on September 17th is key for the IT sector, because a cut in rates by the Fed will lead to higher spending by its customers for the IT companies, and that'll be something to watch. Global AI spending is also increasing and could be another growth opportunity as well. But we had a couple of months ago, TCS announced a 2% reduction in workforce, and while this will help margin in the short term, cost cutting is going to hurt in the longer run for TCS. That was some brokerages' view as well. Finally, in terms of valuations, 22 times price to earnings does give some fillip for investors to get in, but demand uncertainties largely continue to linger. So that's the bull and bear case for TCS. We have multiple triggers, but the Fed rate cut continues to be the major one. And today, with Infosys coming out with its possible buyback announcement, that'll probably lead the sector over the next couple of weeks, to say the least.
Okay, so that's how TCS is looking, both from a bull and a bear perspective. But let's switch focus. My colleague Danish Anand caught up with Maruti Managing Director and CEO Hisashi Takeuchi on the sidelines of the Siam Summit. Let's hear the exclusive chat which he had, where they discuss about the latest GST rejig and the outlook for the company. Listen in.
Takeuchi is the MD and CEO of Maruti Suzuki India. So many thanks for speaking to NDTV Profit. The government has given a major relief in terms of GST. Now there are just two rates, 18% and 40%. From Maruti's perspective, how do you plan to pass it on to the end consumer?
Yeah, of course, we are passing all those GST benefit to the customers.
We'll bring you that chat in just a few minutes. But Kush, the IT index, give us your view. Where does it go from now, and what's the view with regard to TCS?
I think IT index is once again within that range where from where it turned around last time, even the last time around. So I will keenly watch this space. I think TCS offers a good risk reward ratio. That is true for most of the large cap names as well. So for particularly TCS, look at the support level, comes at 3,000 odd levels, slightly higher, but on the upside, meaningful resistance is at 32.25 and 33.60. So 1:2 kind of risk reward ratios in place. The only issue here would be the missing momentum. So if you want to hold them for, let's say, quarter or two, maybe a little longer, then you could still get in for that favorable risk reward ratio. But I wouldn't bet on the momentum piece just yet. In fact, on that point, I like Infosys as well. not just because of the kind of news flow that's come about, the price action also. A couple of sessions ago, we saw a good move. Yesterday, follow through. Today, we're seeing some sort of profit booking. That's exactly what I mean. Momentum's missing, but the risk reward ratio here is very, very favorable.
Okay. Well,